All right, let's try that one. Now you should be able to hear me. Hopefully you guys got me now. Looks as though we do. So now, welcome everybody to our daily market commentary. It's gonna be a great day. Friday morning, wanted to get kind of rolling, get everybody started, and I figured let's do a live one today. And for those of you that are here watching live, you can jump in, use the chat window. And for those of you that are watching on recording, then welcome aboard. Good to have you. So. All right, let's go ahead and shrink my head and we will get started. All right. So, starting first with the S&P this morning, we're up 18 points. Yeah, I will tell you that yesterday we had a live trade room. And in the live trade room yesterday, the thing that we talked about was that if we were going to get more bullish, the S&P was probably our more bullish mark. And we rallied up all day yesterday, went right through what I thought was going to be a pretty decent area of supply and blew right through it without really stopping. Same thing with the level in the NASDAQ. Really no stop on that level in the NASDAQ. And so yesterday's strong bullish day running us up through on the breakout gave us a pretty good run up. But what it did for us on a 4-hour chart was put a lot more questions into trend direction, right? Our trend direction, starting the week, essentially coming down, and then we're basically back where we began the week, right? And so it's not been a super big week one way or the other, but it definitely made our trend direction a little bit more, jostled it around a bit. And so now we're sitting below what could be another breakout point. And it reminds me a little bit of yesterday. In that yesterday morning when we were looking at trading, we were sitting right down below here. So I think we could have another breakout point above this level here. And that's going to make me feel very uncomfortable about a 15-minute supply up above me. And in this market, I have found breakouts to be a bit more useful than reversals. Breakouts have been, in my mind, a bit better, a bit more useful than reversals because the breakouts are following through for the most part. The reversals have actually, I've seen the reversals kind of shift and go the other way, where we've seen a fair amount of weakness in some of the reversals. But the breakouts, I think, move a little bit cleaner, a little bit better, and I can see price. If we break out above here, we can continue to run higher. Now, I will tell you, just as of just yesterday, especially in the NASDAQ, our daily chart, and I'm using the daily to determine this, was lower swing lows, lower swing highs. But we were able to put in a higher high, which frankly was very unexpected by me. I did not anticipate us putting in that higher high yesterday. And if we look at some of our FANG stocks, if you will, from yesterday, they all were up, right? They were all up yesterday. Amazon not up quite as much, but Apple, Facebook, Microsoft, Amazon, Google, and Netflix were all up. And Apple was the one that I said, hey, if you're interested in Apple, I thought we might gap up into this level. We actually gapped up a little bit below it, but the first candle just went right through it. And so, when I look at some of these positions, have we changed our daily chart direction yet? We have not. But we are getting a little bit more strength than I anticipated that we would. And so, one of the things that I'm a big believer in, as of yesterday, as of yesterday, I was, big picture. As an investor, I was still long. As a swing trader, I was looking for shorts. And then as a day trader, in the NASDAQ and Russell, I was looking more bearish. And in the S&P, I was looking more bullish. And that's, that worked out pretty well for the S&P move. But the NASDAQ move obviously cut right through that supply level. And John says, do you think the breakouts are working better because there's no obvious trend? I do, John. I think that the lack of an obvious trend makes our breakouts better when we get a good setup. And here was the other 15-minute level that we had yesterday in the NASDAQ. We hit it, and then it was just that, the 6-candle lull that lulled us to sleep. So what I'm going to do at this point is take a look at where would the next kind of trade setup be in this thing. Well, I'd be remiss if I didn't obviously look at what caused this move up in the first place, this really big, strong rally higher off the 15-minute chart as a potential area of demand, right? But I also need to take into account this area here as a potential upside breakout. So the potential upside breakout is still very much in play on that area. Now, I do have really strong supply over here to the left. And our 4-hour trend in the NASDAQ has given me a bit of a double, a bit of a double bottom setup here. Although what's funny is that I've got a double top inside of a double bottom. And so, interestingly enough, right, here was a little double top, which means the measured move would be from the bottom to the top, right? So let's duplicate that drawing and move it down. And the market came exactly the measured move off of this double top. And then that created essentially a double bottom. So that would be a measured move, right? If we think about the double bottom being right here, right? W, winner, winner, chicken dinner, would be a measured move up to our next hourly area of supply. So we have a supply level up above us, which is actually on a 4-hour chart, a little bit of a base drop. Shows up very cleanly on the hourly chart, a little bit of basing, very strong move away, and it shows up cleanly on the 15-minute chart. So what I would say is you do have a breakout set up above this 13,548 with a first target at 13,630, somewhere up in here for a good solid first target. Take a little bit of money off the table, walk away with a little coin, and I'm okay with that as far as my movement. I think eventually we can make it up to here based on the measured move, but this supply level here has me a bit worried, and so I would much rather walk away with a nice tidy little profit heading into a weekend. Remember, it's a Friday, and anytime we're heading into a weekend, you hold additional risk by holding your positions over that weekend. And so I think that take the breakout trade above here, first target right up in here. Your stop would be below the last pivot, which in this case right now would just be this area down in here, right below the basing zone. All right, let's move over and talk about crude oil. So crude oil yesterday, we had looked at this kind of breakdown area. We did get a bit of a breakdown, but certainly not with the basing required to get us a quality entry. It just blew right through it like the proverbial knife through butter. Came down to our hourly demand, and we've bounced off the hourly demand, but this is a confirmation demand based upon our overall trend and price direction coming down so hard. We have come down pretty hard off that level, and so I would now look for a rollover, right? What does a rollover for price look like? And do we have a rollover that's coming? Well, we might have a rollover, and I would look for a candle-to-candle short somewhere up here, but I don't have in my mind a good reversal short. And so what does that mean? Well, that means that I have that I've got a potential for a reversal for price to come up into this region and then reverse back down. However, the potential for the reversal is not as high as I would normally like because the quality of the origin of this zone over here is not of the normal quality that I would appreciate. And so since the quality of the zone is just not there, what that makes me do is feel uncomfortable about just taking a short. However, a candle-to-candle short somewhere in this region would make a lot of sense. So let's say we get up to this region and we put in a candlestick that's shaped something like this, right? Where we've got a high wick that goes up, a lower wick down below, and then a doji kind of body. Well, then I can get short below that candle's low, right, with a stop above that candle's high, because I'm in the area where I could have a reversal, but it's not a high enough probability area that I would take it without the candlestick forming. Does that make sense to everybody? I want to make sure that that everyone jives with that, and that is really utilizing the candle to candle style and the candle to candle method of trading. All right. And then the last one would be gold. And gold, looking at this thing, we were looking at it a bit yesterday. It's really gone kind of sideways, right? We're still in between those two big wicks, and we've gone very sideways. And when I say in between, those two wicks right there defined a range, and we've been inside the range of those two big wicks for the rest of the week, essentially. And so I didn't see a whole lot. We did have a trade into our confirmation supply. Got to move away. I'm going to remove that level at this point because we traded more than halfway into it. I will say that we are putting in a bit of a symmetrical triangle pattern, right? And on a symmetrical triangle pattern, in order for this to actually be a symmetrical pattern, we need 5 touches. 1, 2, 3, 4, 5 would be essentially what we're looking at here. And one of the things that I've seen on those symmetrical triangle patterns, when you're looking at those, hold on one second here. Let me do this real quick. So let's say I've got this picture. I guess I can't. I'm having a hard time writing on my screen. Anyway, I'll use circles. So essentially, here's touch 1, 2, 3, 4, 5. And when I have 5 touches, typically what you look for the measured move is touch 2 going to the opposite side on a breakout. Well, touch 2 to the opposite side would be this distance, same essentially as touch 1. And so it would be a measured move of about this much. That would be our anticipated breakout. Now, the question is, which direction do we break out? The answer to that is there's no clear, definitive breakout direction when you've got a symmetrical triangle pattern, because that, by definition, that symmetrical triangle pattern is an upward move with slowing momentum. All right, if I put my momentum on the screen, we'll be able to see that I have higher highs in price and lower highs in my momentum indicator. So while I like the setup of the triangle pattern, understand that it could break out one way or the other. Now, probability would state that it has a better chance of breaking out to the upside simply because we're in a bigger picture upward trend. Right? By being in a bigger picture upward trend, the probability would state that we've got a better chance of breaking out to the upside. But if indeed we do break out to the upside, then your measured move takes you to somewhere around 1920 as your entry point. Okay? So that would be our gold market for today. And those are the 4 markets that I normally look at when looking at these areas. I do want to take a quick peek at the there it is, at the euro. I think the euro is worth taking a quick peek at. The euro, we had a nice level of demand right here identified a while ago where we had this little rally, very nice base, very strong move away. We retested that level and it worked beautifully and we got a strong move away. Well, now we're coming into it a second time. And so if you think about that, whenever I've traded to the bottom of a level and now I'm coming into the level for a second time, what that means is that I've got a better chance of price breaking down from this point. So I'm actually going to put a little breakout line here as a potential. We may bounce right off of that, but if we get basing, then I think you've got a breakdown trade. If we blow right through it, then let's talk about this old area of support acting as a new area of resistance. I think that you could have a really nice turnaround trade right there on that one. So I like the euro setup that could be coming off of the demand level that was very effective because we've put in a really nice double topping pattern here. All right. Well, with that being said, everybody, I hope you guys have a great day. I just thought I would jump on, do a live one today, and instead of just doing the recorded version. I hope you guys have a phenomenal day. I'm taking a week off next week, so I may or may not be here every day for the daily market commentary. Frankly, I haven't decided yet. Will depend on how I feel. But I'm taking the week off, doing some family vacationing, so I will not be in our live trade rooms. We've got Herman Casas and Justin Krebs filling in for me in our live trade rooms. If you've not been to the live trade rooms, go to tradersarmy.com, take a gander at membership, see what it's like to become a member. Use promo code TRADER60 for 60% off your first month. And until next time, everybody, I will talk to you soon. See ya.